Hello friends, welcome to my channel, Saddle Up in the Bluegrass. Today we're going to have the expert opinion of Brian May from Stockton Mortgage to give us guidance when the opportune time would be to lock in an interest rate. Or if you already have a high interest rate, when you could wait around and get the lower interest rate. So we're going to go into Brian's office and let's see what he has to say. Today, we're going to have Brian May from Stockton Mortgage. He's helped me with loans ever since he's been in mortgage banking, and that's been over 20 years. So I trust him. I'll send all my good people and bad people to him because I know he will do the very best job he can. So today, Brian, I want to know, why is it that everybody's telling me, I think I'm going to wait until the mortgage rates drop? When do you think a 5 or a 4 will come around?
I've heard that a lot. People just want to wait till the rates drop. They got used to rates in the 3s and the 4s, and now that they're in the 6s and they had been in the 7s, people do think, well, I'm just going to wait till they drop, and I don't know if they are going to drp. Historically, rates have been in the 6s, 7s, or higher. Mm-hmm. And so if you're waiting around for rates to drop, you may have to wait a while.
Do you see the market dropping in a little bit because people wanting to wait?
No, I don't think it's going to drop because of that. Now, if the war in Iran ends and oil prices go back down, rates could drop a little bit, but they're not going to drop into the 3s or the 4s, most likely. Maybe into the 5s, but there's no guarantee they're going to do that. If you look back at history, 6s and 7s are above or where they are. I know there's one statistic. If you were trying to buy a house in 1971, rates were 7.1%. And if you said, I'm going to wait till they get to the 6s, you had to wait over 20 years for rates to get back to the 6s. And if you said, I'm going to wait till they get to the 5s, you could have paid your house off and been debt-free by that time because you had to wait over 30 years. So there's really no guarantee that they're going to go back down below the 6s.
Well, a lot of people caught it when it was 2.9, and right. Now everybody thinks that's going to happen. And I doubt that in our lifetime we'll ever see that.
Well, 2s and 3s aren't normal. And so could they happen again? Sure, they could, but something very dramatic would have to happen in the world for those to go back down. And even if we had another pandemic like COVID, I don't think we're going to react the same, and I don't think rates will react the same either.
Well, I hope we never have another pandemic. Yes. So I was looking at some statistics, and it looks like a person can put their house on the market and it sells in 54 days. So that's not bad, really. I mean, that's showing that things move, and there's a lot of people with money out there that want to buy the right properties. And so anyway, I'm just wondering why so many people are waiting around for 4% and 5% interest rates. It just seems abnormal because when I got my first house was 6%, but my second house was 18%.
Yeah. That's right.
Yeah, it had been 7, and in the week that I was getting ready to close, it jumped to 18%.
Wow. Yeah.
I had to get married because of that to pay my interest.
We think 6s are bad.
Yeah.
18's really bad.
Yeah. That was in the 80s.
I've heard a lot of people waiting. They say they're going to wait till rates get down. But what's going to happen is, let's say you wait 2 years for rates to go down. Well, even if they did go down, you're going to pay $20,000 or more for that house than you would have if you bought it a couple of years before. So you buy the house now. If rates go down, you can just refinance, take advantage of the lower rates. And if they don't go down, well, you've bought that house at a lower price. Mm-hmm.
What kind of mortgages do you have for? I went to a local bank the other day, and they gave me a flyer on no down payment, credit score 687. And no mortgage premium insurance. Do you have anything like that?
So the two biggest myths, I think, especially for first-time home buyers are, one, you have to have a lot of money to put down. And the reality is you don't have to have a lot of money to put down. There are a lot of programs, like you said, there are no money down programs or very little down. The most you'd have to put down is maybe 5%. And then the second myth is you have to have great credit. And people think great credit may be 750 or above. The reality is if you have a 620 credit score, you're qualified for most of the programs out there. And even if you have a credit score in the 500s, you can still get a house. You can still get a loan in a lot of circumstances. Mm-hmm. So you don't have to have great credit. So there are That's a lot of options out there for people, no matter what situation you're in.
Now, are those loans for people that have never had a house before, but if they'd owned a home before, they could still get those kind of rates, or they could not?
Well, it depends on the program. There are some programs out there that are just for first-time home buyers, mm-hmm. but the majority of programs that are out there are for the general public. Mm-hmm. And it doesn't matter if you've owned a home or not. Some of them are income-based, so it really depends on what your income is. And a lot of those programs, even that are income-based, they may go up well over $100,000 for someone for their annual income.
Now, I see a lot of people that are wanting more expensive homes and talking about jumbo loans. Mm-hmm. What kind of interest rates are for jumbo loans?
Jumbo loans are maybe a little higher than your average conventional loan, but not much. Jumbo loans are, in a lot of cases, priced very competitively with regular mm-hmm. conventional Fannie Mae or Freddie Mac loans.
Are they harder to get?
Not necessarily, no. No, I mean, obviously you have to make more money to qualify because you're buying more house, but in general, the guidelines are usually fairly similar.
So, Brian, can you tell me about some of your loans that seem to be really popular right now so that people that I'm working with can get into a home?
Sure. We do a lot of loans through Kentucky Housing. And the reason we do that is because they have down payment assistance. And so if you're buying a home, even in Fayette County where rural housing is not an option, you can still do conventional or FHA loan with up to $12,500 of down payment assistance. So I can take care of your down payment, part of your closing cost. So really can get in that house with very little money down.
There's a lot of people right now, I just sold a house and they want to renovate.
Yeah.
So do you have a renovation loan because I have 2 or 3 people that have wanted to buy houses, but they like the house, they like the location, but they wanted to renovate it. What do you think about renovation loans? Do you have that?
We do. Actually, we do a lot of renovation loans. One of the things that you face in this housing market is the age of the homes, and the homes are getting older. Mm-hmm. And so you do have a lot of older homes that people want to buy, but they may not be move-in ready, or they may not look the way they want to look. So we have a renovation loan where we lend you money to buy the house and fix up the house, either new paint, new carpet, maybe you have to put on a new roof, HVAC, do an addition, just about anything you want to do.
So I know there's a lot of talk now about lead paint in the pipes. Mm. Do you check for that at all in any kind of inspection, or does it matter?
That's really going to be a home inspection. Uh-huh. So when you have your home inspection, which you should have, they should really check on the pipes. They should let you know if there's lead-based paint in the house, mm-hmm. As well as all the other things inspections.
Sure.
Handle.
Well, any other kind of loans that I should know about to tell everybody today?
I think no matter the situation, we probably have a loan that'll fit your individual needs. And if you're not in a position to buy now, we can put you on a plan so that maybe in 6 months, a year, 2 years, you put yourself in a position to buy.
So actually what you're saying there is that if you have never gotten a loan before, it's probably good to get pre-qualified now and find out if you're ready to buy and how much you can buy. Do you think that's fair?
Absolutely. If you're thinking about buying a house, whether it's now or in the future, mm-hmm. go ahead and get pre-qualified, because you want to know, can I buy now? Or you may not be able to buy now, so we may have to put you on a plan so that in 6 months you're ready to buy. Or maybe in 6 months you're in a position where your loan will be cheaper.
Yeah. You know, what I find with first-time home buyers is that they're scared. And mm-hmm. I actually was always scared until I've been dealing with this, because you hate rejection and being turned down. But it's really, it's like coming in here and talking to you. It's somebody that's going to help you get a loan to get you into a house. And it's nothing to be scared of, I don't think, just because my credit score is 590 or something like that. I mean, that's good. At least you have a credit score. Do you not think that's...
A lot of people, when they're buying their first house, they are scared. And sometimes that holds them back from even going through the process because they don't do this every day. Yeah. You know, we do this every day, right? I do this hundreds of times a year. So, you know, I will help walk someone through the process and make sure they're comfortable. And the same, just like a real estate agent will help walk them through the buying process so they are comfortable.
Yeah. Well, I think it really helps because of the relationship that we've had over the years. When they start talking to me about, I don't know if I qualify or not, and I'll say, well, here, let me give you this number and call. Right. And I always tell them that you'll do the very best that you can for them. And I think, but that if they want to call around and get 2 or 3 different quotes, to feel free to do that. Now, does that hurt their credit if they are calling?
It doesn't. For a mortgage, you have about 45 days where you can get multiple credit pulls, and it doesn't hurt your credit.
Okay. Because I always heard that every time it's pulled, it's lowered. And I think that's a good thing for everybody to know.
Absolutely.
So what I'm hearing is that now is the best time, not 2 years from now, not when they're waiting around for the interest rates to drop to 5 or 4. Now's the best time to get started if you want to buy a house in the future or if you want to buy right now. They need to call you and get pre-approved. And to me, that says the best time to buy is now.
Yeah, no matter whether you're ready to buy now or you think I'm going to buy in 6 months or a year, you want to go ahead and get the process started. You want to know where you stand, make sure you're in the best financial position to buy either now or when you're ready to buy in the future.
Well, if I came to you and you started pulling my information and everything, how long would that information be good for?
Your credit report lasts for 4 months. And as long as things don't change, you don't change your job, you don't make any major credit purchases or have any late payments, you're going to be good beyond that. We just re-pull a new credit report.
So what's your opinion of the market right now? Everybody tells me they think it's slow. I don't see it being slow. I see it still being kind of a seller's market. Not particularly a buyer's market. What's your opinion of the market right now?
I mean, houses still seem to be selling, and the good houses are selling quickly. And houses that may not be quite the quality may take a little longer. But overall, we're still seeing houses that go on the market and sell in a couple of days, maybe with multiple offers, or we're seeing houses that sit for a while.
Well, I did look that up, and they said 54 days. So
54 days is the average.
Yeah.
Some sell right away.
That's right. That's right.
Some are going to be on there a while.
There was one down the street from me that was more expensive home, $900,000, and they had 18 showings in 7 days and 8 offers.
Yep. Put the right house on at the right price, it'll move.
Yeah. It was the right price and the right location.
And I think really it sort of evened up. It was such a seller's market there for a while because we had such low inventory. We've gotten a little bit more inventory in the market now, so I think it's evened up a little bit to where buyers and sellers are both more on an even footing.
Well, thank you, Brian. You really gave us some insight there. I hadn't thought about the prices of the homes getting higher and then we no longer qualify. That's a really good point. And luckily in Fayette County, they always have continued to raise, even if it's just 1% or 2%. That's one of the good beauties about buying in the bluegrass. I tell my clients, especially first-time home buyers, that you cannot have any better investment than your home. And why is that? It's like your piggy bank. If you would put money into your home over the years, you might buy it. And this actually has happened in Fayette County. We've all missed that a little bit. But you could buy a house at $50,000, and in 10 years, 15 years, at 50 can be $200,000. So that's not impossible. There are some places you buy houses that are $800,000, and in 5 years they might be $1.4 million. So our properties keep going up, and that's because they're not already $1.4 million. Some of them. We do, of course, have $1 million houses now, but it's always a good investment to put your money in property. It's something you can touch, you can see, and if it burns down, you've got insurance. So it's a pretty safe investment. But he pointed out that interest rates have not changed in the last 4 years very much, between 6 and low 7s, like 7.2 and 3. So if you wait around for that 5, that house that was $300,000 probably is already at least $350,000 to $360,000. And some of us, it would put us out of the buying market for that property. So the best thing to do is take advantage of it now. And I've got a story, a personal story. I waited around because interest rates dropped to 5 for a little bit before I made the decision to refinance. And I decided that they had gone up to 6, almost 7. I would wait until they came back to 5. Well, guess what? They never came back to 5. After about 4 or 5 years, they were up to 7. And I needed to lock because I was even higher than that already. So I missed out on that opportunity right there, having a high interest rate and not getting it when it was down to 7 or 6.5. They say that you really make your money when you get at least 2 points. And right now, that's probably not possible. But of course, we want the lowest that we can get. And yes, that's my bird. He is wanting attention, and he doesn't like me talking because he wants to talk. Anyway, thank you for being here today. And until the next time, I'm Brenda Stewart with United Real Estate. If you have any questions, any houses that you would like to look at, or need to sell your house, or relocating to Kentucky, please call me, text me, email me. I'm here, I'm willing to help, and I can help you. Thank you for joining us today.